Well, Brent crude continues to decline for the third consecutive month. In fact, in the month of September, the kind of decline that we have seen is the highest since August 2022. So why is this declining oil prices beneficial for India? Firstly, because oil remains the key source of energy for India. Nearly 85% of India's oil consumption needs are met through imports. However, India's oil intensity has declined rapidly over the past few years. For instance, if you look at when India's GDP was nearly near $1 trillion, it was importing around 900 million barrels of oil, which is nearly 8% of the GDP. However, this has now come down to around 4% of the GDP. India's total GDP now stands at around $3.5 trillion and imports nearly 1.7 billion barrels, which is around 4% of the GDP at the current prices. Now, how does it impact inflation? Firstly, fuel has a direct weightage of around 4.4% in the CPI and a weightage of around 7.95% in the WPI. And a 10% decrease in the oil prices could lead to a reduction in the CPI and the WPI inflation by around 40 to 80 basis points. When it comes to the current account deficit, oil accounts for nearly 26.5% of the total imports and 61% of the commodity imports. And a 10% decrease in the oil prices could narrow the current account deficit by around 30 basis points. When it comes to growth, generally falling oil prices likely to have a favorable impact on the domestic growth of the country through a lower inflation, looser financial conditions and robust business sentiments. However, do remember that to realize this benefits, oil needs to continue to remain at these lower levels. Short-term fluctuations don't tend to have any major impact on the country or on the financials of any company.